Hey, good afternoon, everybody. Thank you for taking time out of your schedule to join our webinar. Kind of what we're going to talk about today is what are FBN's thoughts and kind of opinions, and what are some of the variables that we'll be looking at heading into the harvest season. Why don't we just take another minute or so, kind of wait for any other attendees to join. But before we get started, I did want to say, as we go forward, please feel free to ask any questions at any point throughout the presentation. I think there's at the bottom of the screen in the webinar page, there's a room to type in some messages, or rather, excuse me, some questions. So at any point, please feel free to ask a question as we go through this. And also, too, is before we get started, this presentation is part of FBN's Market Intelligence Group. If you're looking, for a free trial of our market intelligence, which will give you access to some of our products, which include, but are not limited to, some of our daily emails, please text Intel to 313131 for a free trial. And it looks like we have a few other people that have joined here, but just as an introduction, my name is Walter Kunisch. I'm a senior commodity analyst at FBN, and a little bit about myself is I have about 14 plus years experience in the commodity sector, both doing analytical work and trading in both the commercial aspect of the business with both Cargill and Tyson Foods, and in the hedge fund side of the business in New York. In particular, I've spent a lot of time analyzing and trading both agricultural, livestock related commodities. So I think, as we kind of go through this presentation, I think from an FBN's market intelligence perspective, our market intelligence clients have access to myself, as well as some of the other professionals in our group that have kind of a unique position and unique views on the marketplace. I think that's one of the differentiators. So moving ahead, what we'll do is, when we start to kind of a little slight overview of what we're looking at today, we'll include some of our yield predictions, look for both corn and soybeans, and as well as tie in, again, as I mentioned very early on, some of the other variables that we're looking at heading into harvest season. And at the end, as always at FBN, we'll tie this back together and what it actually means for the farmer. As we click ahead, this FBN's risk disclosure, where the risk of trading futures and options can be substantial and may not be suitable for all investors. All information, publications, and reports, including this specific material, is used and distributed by FBN, shall be constructed as a solicitation. FBN does not distribute research reports, employ research analysts, or maintain a research department as defined by the CFTC. This presentation contains information obtained by from sources believed to be reliable, but the accuracy is not guaranteed by FBN. And most importantly, past performance is not necessarily indicative of future results. So now, moving into the heart of the presentation, now we got the little disclaimer behind us. As we begin to shift into from August, from kind of the peak growing season for corn and beans, and into beginning kind of the late stages of development and into harvest time, at FBN we're really focused on the supply side this year. For those members who have been with FBN, thank you very much for being with us. We have listened to our presentations throughout the summertime. We believe that given the planting delays that have taken place with both U.S. corn and soybeans, that 2019 can represent some epic challenges for both corn and soybean yields. We also believe that these yields, while generally not reflected by the USDA by the USDA in the last 2 months, we believe as we move ahead into September and October that the USDA's yield survey methods will help capture what we believe are some of the yield penalties that are occurring both in corn and soybeans that are a direct result of late planting. Looking forward to the September WASDE report, we do expect yields to decline. The reason we're looking for yields to decline is that specifically in the September report, the USDA will return to normal in how they capture, analyze, and assess yields. Meaning that the USDA will present an objective yield survey, which they did not conduct in August. And that objective yield survey does include a more kind of a boots on the ground, survey-based, if you will, type of approach, meaning that this type of yield approach was not absent in August, but will include such items as pod counts, row counts, kernel counts, to help facilitate their opinion on yield. So again, we do believe that that yields are fragile at this point for both corn and beans, and do possess some upside risk. Upside risk meaning that we do believe that yields can compress, and we believe that really that there could be a late start to the harvest this year, given the weather constraints from early on. And we believe that this that any late start to the harvest this year will certainly be accompanied by production risks. So moving forward, we'll start our focus on corn. And what we're looking at right now which is kind of interesting. This chart shows kind of a corn area weighted average temperature. And what the corn crop really needs right now is, for those who are attending who are corn producers, we believe that the U.S. corn crop right now at its current state needs heat, needs degree days. And we can see when we're looking at this chart right here, as represented by the green line, that for most of the year, the 2019 temperatures have been well below average, and well below trend. So when we look at this, so we look for where we were in the beginning of the year. The corn crop, to an extent too, the soybean crop like I mentioned, is in need of growing degree days. However, if we start to look toward where we are, forecasted values toward the end of August into September, it looks like there's a probability that, again, we're starting to see temperatures dip early on or later in October into early September, and then slightly recover within the first 2 weeks. But once again, the corn crop desperately needs growing degree units right now in order to mature. Moving ahead, we can see the average daily temperature versus normal temperatures in order for the corn to reach its maturity levels. And again, looking at a county by county basis here throughout your key corn producing states in the U.S., we can really begin to see where those temperature challenges are coming from. So again, as I sort of mentioned very early on, we are looking, while yields have certainly stabilized in soybeans over the last 2 weeks, the corn crop remains very fragile. We look at these, we look at what the temperatures are relative to normal, specifically in the states like where we are in Missouri, parts of Iowa, specifically. Then once we get down into parts of southern and into central Kansas, we're seeing temperatures that are well below 10, anywhere from 5 to 10 degrees below normal, and that is not encouraging for the corn crop right now. We believe that these temperatures need to remain high. They need to remain above normal and help to facilitate growth and help to facilitate proper yield development. Looking ahead, we also see that, again, looking at the average daily temperature in kind of a histogram format relative to normal, we can also begin to see what percentage of the U.S. corn crop is behind. If we look at the red box that's on the right-hand side that says behind pace to reach maturity, approximately 22% of the U.S. corn crop is well behind average. Is well behind average temperature reflection needed to gain the appropriate maturity level. So as we progress and think back at the forecast, where we're seeing these below average temperatures over the next week and a half, and then a slight recovery, the loss of growing degree days, has the ability to negatively contribute toward both production estimates and toward yield estimates. And we can sort of see again right here where an FBN's model structure is telling us for yield forecast. This latest model structure the latest corn yield model was run on August 22nd. And we can see at a national level, we're at 165.7, which is about close to 4 bushels below where the USDA was in August. And we begin to sort of look down and see at the individual state level, where these states are compared to the USDA's forecast. And again, thinking back, we know that the corn crop is vulnerable right now. We know that the development of the corn crop is behind its historical averages. We know that and again, all of this contributes to the fact that it adds a level of risk into the marketplace. It adds a level of risk because if we're not seeing the estimated necessary growing degree days or those growing degree heating units, again, we believe that the U.S. corn crop becomes more vulnerable, toward both yield and production losses. Moving ahead. Again, kind of another chart on a county by county basis showing FBN's corn yield forecast and the deviation from trend. And again, while we know that most of the corn crop in the U.S., given the late planting start this year, is certainly well below trend. Specifically, when we look at portions of both the Eastern Corn Belt as well as portions of South Dakota, southwestern Minnesota. Again, thinking back to just how fragile the crop is right now. Again, as I sound like a broken record, we need those heat. The corn crop needs the heat. It needs those growing degree days to help recover. So we're very focused, again, on what's taking place inside of South Dakota, Minnesota, parts of northwest Iowa, and what's taking place in Nebraska. Will the temperatures over the next few days, over the next few weeks, have the ability to particularly continue to drag down yields? Moving ahead, again, sort of thinking about how will the USDA approach this information? How will the USDA, look at how do they treat yields sort of moving ahead? Well, how will the USDA treat yields moving from September WASDE to October WASDE and into November? And what's interesting is we look back over time, we begin to see the yield change from September to November. And really from 2001 forward, there's only been a few years where the yield drag has been extreme. Obviously, we know what happened in 2010, 2013 as well, and we saw incremental changes in 2018. So when we look throughout time and we think about where U.S. corn yields can progress, there's obviously the USDA's history is to increase yields from the September WASDE to November WASDE. But given how delayed the corn crop was planted this year, and given how fragile that corn crop is this year, we believe that yields can continue to contract. And when we move to the next slide and we want to think about yields, we want to think about harvested acres too, because 2019 is also a very unique year. Given the planting delays that have taken place, combined with the Trump payments, given the challenges that the U.S. corn crop has experienced this year, we look right now, again, what happens to harvested acres? How will the USDA treat harvested acres going from the September WASDE and the November WASDE? And looking throughout history, there is an overwhelming, unlike the yield side, there is an overwhelming propensity by the USDA to reduce those harvested acres heading into November. And again, if the maturity of the corn crop, we know it's behind the 5-year averages, we know it's behind historical averages. If the corn crop doesn't get those temperatures and harvest continues to get pushed back further into the marketing year, we believe that absent an early frost, that there is a propensity for the USDA to reduce harvested acres, and we can see throughout time the USDA is very active in how they reduce and how they treat their harvested acres. So again, we believe that moving ahead, and as we start to look at soybeans and consider what's going on with soybeans, we want to consider from a corn perspective that the crop remains vulnerable. For our listeners who are corn producers, this. But thinking about on a national level, outside of your county, at the state level, at the national level, the corn crop needs heat. There's no signs of an early frost right now, but again, we believe that both production risks point to the upside from both perhaps a reduction in yield and reduction in harvested acres. From the soybean side, FBN just released, and everyone on this webinar is seeing our August 28th soybean yield forecast for the first time. We're kind of steady at this point right now. We're at 47.2. We believe that the U.S. soybean crop is yield potential is stabilizing. We can see when we look down the list, many of the states, with the exception of Nebraska, are experiencing serious departures from trend, and that's in both the eastern and the western Corn Belt. Favorable weather conditions in Nebraska, certainly in certain parts of improving weather conditions in parts of Iowa, improving weather conditions in North Dakota are attributing towards stabilizing yield conditions. But overall, we believe that, again, that that our 47.2 bushels per acre is an accurate reflection of what's taking place, and again, it does represent a departure, 2.3 bushel departure from trend. Moving on to the next slide, we can again sort of similar to what we saw for corn, a map depicting what soybean yields are like on a county and statewide levels right here. We can begin to see, particularly looking at parts of Southwest South Dakota, as well as portions of the eastern Corn Belt, and leaking into portions of eastern central Missouri and eastern Missouri, that again, while we believe the overall health of the soybean plant and the yield potential for the national soybean crop is stabilized, we're clearly at this point, given those extreme planting delays, given the extreme cold temperatures and increased levels of precipitation that we saw early in the year, we'll have the ability to negatively drag yields down. Moving ahead. Again, sort of looking at, again, very slide similar to what we saw in corn. How does the USDA treat soybean yields as we progress through harvest season? So looking at the USDA's treatment of soybean yields from the September WASDE to the November WASDE, we see that an overwhelming majority of the time, the USDA does increase soybean yields. There's obviously a few outlier yields back in 2003, but overall, the slight yield reductions heading in throughout harvest had been very minimal, perhaps at anywhere from about a half to a quarter bushel per acre. And again, moving forward, we have a slide that shows similar content to what we saw in corn. How does the USDA treat harvested acres? Overall, the results, unlike corn, is kind of mixed at this point. It looks like since 2001, the USDA treats the change in harvested acres throughout harvest period, throughout that September, October, and into November time period, kind of with a kid's glove. We do see some extreme movements, but overall, it seems like the USDA makes either minimal adjustments to the downside, subtracting harvested acres, or that the changes are very minimal. In 2019, given the delays that we've seen with the planting with the soybeans, we do view the soybean crop as being somewhat restrictive in terms of where we are in the development cycle. And similar to corn, we believe that absent extreme weather at this point, that the soybean crop, the development of the soybean crop gets pushed back, yield penalties and harvest penalties still remain. So in conclusion, when we kind of like, if we could switch to the next slide, please. When we start to kind of wrap things up and we sort of look at what at FBN are we considering over the key drivers over the next 60 to 75 days, excuse me. As I mentioned, corn desperately needs those growing degree days to help realize its yield potential. Otherwise, we believe that as time progresses and the USDA reverts in September to a more normalized and objective yield survey process, we believe that absent these growing degree days, that yields will continue to suffer, perhaps not as much in the September report, but again, given the fragile nature of corn, absent the heat, we think that yields can continue to contract from September into October into November. The soybean crop, our model structure shows, has become more stable. We're starting to see in our last model run, as we just talked about, we're starting to see those yield penalties starting to dissipate a little bit. We're starting to see a stabilization of the crop in both the eastern and the western corn belts, corn belt producing states, but also we're starting to look at the temperatures, the forecast that resides ahead. Absent is more favorable for corn and soybeans. We're not looking for right now at this point an early frost to come. We believe that that the weather should present a more normalized fall or a normalized development or transition into fall-like conditions. So at this point right now, we don't believe that an early frost will exist or could surface in key parts of the U.S. That's not to say that it won't, but again, if absent an early frost, we believe that a normalized frost transition, has the ability to temper some yield expectations. But overall, we believe that the scenarios, we kind of sit here at the end of August with 2 days left in the month, looking ahead into the fall. We believe from the corn side, the corn crop remains fragile. Yields are both yields, harvested acres should be subject to downside risk. If the corn crop doesn't get the necessary growing degree days and the maturity continues to lag behind, we believe that harvest will continue to get pushed back, and we believe that that should create upside risk. From soybeans, again, we're seeing a crop that is stabilizing. We believe that the weather over the next 2 weeks is more favorable for soybeans and corn. But again, we do see further upside risk inside of both crops.